Hello, this is Cryptolyze. I hope you're doing well. This Thursday, 14 December 2023. We meet today to talk BTC, to talk crypto news, and also to talk macro. Talk about Jerome Powell and the sacred speech he gave us yesterday, which notably led to the U.S. macroeconomy, the Nasdaq, the OSP 500 soaring upwards, and a new 88th of the Dow Jones, and inevitably behind an acceleration of BTC. It's been a long time since we had a correlation between the two, and I'll explain. Why now? If you want to train and really enjoy bull running, it's simple. There is perfect, complete, free training available. It's through an educational journey that teaches you everything about blockchain, crypto, investment, technical analysis, and trading. All this for free in comments and descriptions. You have exercises, multiple choice questions, modules, videos, guides, everything to support you in your progress. Just before getting to the heart of the matter, I didn't have time to deal with some very important news, which is the change in Google's regulations on advertising around crypto and Bitcoin, and in particular we had a change which will be effective at the end of January, which allows us to be able to carry out communications around ETFs spot Bitcoin. So very important, we see that it is not just us who are preparing for this arrival, and I think that in fact there will be a lot of communication around this if it launches and the way in which it starts. So we see that we have a form of enthusiasm, and that is a very, very good sign. This is a very good sign that certainly Q1 2024 we will have validation. Afterwards, there are two possibilities. Either it is Q1 2024, or it is redeposited for March 2024 and validation at the end of the move of Q1 2024. So there are the two possibilities, namely that there are two things. There is the implementation of the validation, therefore the fact that the SEC validates, and then the arrival of the ETF on the market and what is fair. Interesting to see how Google, for example, is complying with what is happening. If it hadn't been BlackRock, I think we wouldn't have had any change. We wouldn't have had change in regulations, because it's the same. Remember that changing Google is not as simple as that. This implies that behind the scenes, the compliance department was informed by the various authorities that it was possible. Finally, understand that this means that we have acceptance of communication around the spot ETF by all U.S. regulations. It is also the validation of what we already knew, which is that in all cases, the ETF will be validated. Whatever happens, we do not accept advertising on this ETF and subsequently ban it. So whatever happens, even if we ban it in the short term, in any case, we reject the request in the short term. Remember that there will be a new file that will be submitted and that it will be validated whatever it is. Arrived. Other news we have, that's it. For those who followed the video on the narratives and in particular that of the RWA, I spoke to you about the possibility of certainly having on tracks the implementation of a real-world asset tracker. That's it. It's done. It's out. I believe today or yesterday in 19. So it is available, in which we find Pendle. Pendle, I made a video for you this week on it. We find Dusk, Link, TrueFile, Maker, Logic, SNX Classic, Chromia 2, and Maple 2. So we really have some great projects lined up. Behind, I also remind you that we have one on artificial intelligence with Fetch, Render, Singularity, Ocean, and Golem. So we have two trackers which are on existing narratives. Narrative that I have covered for you in length, breadth, and depth. If you want to expose yourself, it's very simple. Above, at least, it's a big advantage. You have the link in the description and in the comments if you are interested. Moreover, many of you have asked me the question concerning this information here to recover the password necessary to be able to access it. From what I understand, they give the password on their Twitter, so don't hesitate to go there if this private cell interests you, and don't hesitate to discuss it elsewhere on the Discord, because I saw that there were a lot of questions on it, and obviously the Discord is perhaps more appropriate to discuss them. Next, we will return to yesterday's information. This is the FOMC, in which we had the rate which did not move. We knew that. Everyone knew that. But what was really interesting was Jerome Powell's speech. I hope you followed it. In any case, the feedback is rather positive. What comes out of this is several things. This is because, one, already at the level of the dot plots, which represent the potential evolution of the rate by the different members of this commission, we see that we are starting to have a very strong inflection. Whereas precisely during the last dot plot, we saw that we wanted to keep the rates relatively high. That's it. We are going to say that the Fed's position of communicating around a potential decline is indeed present, and it has confirmed the decline is in. The discussion and will now be systematically about the FOMC agenda. So that means that we are indeed getting closer to the establishment of the Fed pivot, and that has a very strong impact on the markets, as you have certainly seen. We will certainly go in any case in the part graph analyze it. But what is also important is that he recalled two things, is that for him it is only valid if we continue the axis of descent at the level of inflation, and that we are heading towards the 2, and that he recalled that he had the capacity to still be able to act on the rates on various other elements to bring inflation to the 2. So he recalled that their objective is that even if we are discussing the reduction of rates, so it is rather classic in terms of speech, but what is interesting to see, it will be behind the CME. The CME is the representation of the probabilities of the evolution of rates by institutions, and we see that this has already dropped a lot in January. We were around 90 here to remain precisely neutral, so without any change in rates. So now we are starting to have 20, so it has already started to decrease. And above all, what is interesting is that we see that we are heading below 70 from March and below 65 from May, and I think that will continue to go down quite quickly, so that means that the market is clearly pricing in the implementation of the rate cut very quickly during 2024, and perhaps even faster than what is expected by the Fed. And this is perhaps where we will have to be careful if we ever have too significant a gap between what the market is integrating and the reality of rates at the Fed level. Besides, today we have some little information. We have the ECB, which will try to do the same thing. Clearly, it won't be read in the same way, and it will have little impact. What will be interesting will be to monitor the weekly unemployment registration once again to see what is happening. We have a few other little things with retail sales in November. For the moment, we have quite few movements. On the other hand, it will be Friday 15:45 for the December PMI, where in fact it will be monitored whatever happens, and it will be interesting to see whether we remains above 50. I think we will necessarily be above 50, and that will potentially validate the upward acceleration. The bullish acceleration that we see very well at the level of this candle. Big candle at the level of the S&P 500 big momentum, which was created on the announcement and the Fed speech. We see that we really had a big acceleration with a day at 2.5. We did not make any new AT8th. But in any case, we are consolidating above the level. Very important that we had from July 2023, which was before having the breathing in 2 stages, in which we set here a retest zone before having the acceleration, therefore which was in the zone which we had defined at the time to have a new breath, except that here in fact we are in the process of breaking this zone, which is a very important level. And on the Dow Jones, we made a new AT8th. On the Nasdaq, we're really not far from it. Really not far. I think it's possible that today we'll get there, with a huge surge, with huge candles. See if we can maintain this pace at the close of this week. There we will have a signal which will be rather bullish. And there we will have to ask ourselves the question, are we over-chatting on the indices and overreacting the market in relation to the news that and the news that is being integrated by the market? Once again, we always find ourselves in a market that is 6 months, 9 months ahead. Did we just have this speech announcement here and that we potentially find ourselves there in a new typology of announcement and a higher probability of the implementation? It could be the implementation, for example, of the first pivot of the Fed. Why not? It still seems relatively short to me. But we must keep in mind that we have in all cases a period of on-chat in which we are in the process of heading. We see it clearly at the level of the RSI. We also see it in terms of inflection and impulse. It is not a market which represents the current economic reality of the country and what is happening. And what is interesting to see is that, for example, when we look in the short term, it has been a long time since we have actually had a series of candles like that, which is impulsive enough to really set a trend, okay? We can clearly see that we have a series of days in green in which we have no retracements. Same here, and we see that it is relatively rare. We have a few small parts, but still it is even less in terms of temporality. This also implies that we are in a market which is excessively impulsive and which reacts very strongly to various news, especially from the Fed. We know very well that this is what is being scrutinized by the market. And in terms of oil, what is also interesting to see is that I told you that we are sinking, yes, but we see that we are already arriving in a buying zone. D agreement? We can clearly see that when we start retouching in these areas, it is systematically purchased. Here, I think that even if we go back, it will then be bought and so on until we arrive at a form of acceleration of this style, before starting to rise again, and there we will have a potential problem with a re-increase in inflation. The question is how long we will stay there to be able to stabilize the current inflation and be able to absorb the increase in the price of oil, which will happen whatever happens. So this will be an eye to watch, I think, in the following quarters. We will keep it aside to come back to it regularly. At the BTC level, we pushed very hard. We almost reversed a good part of the movement. We see that we went here to retest a large part of imbalance. When we look at this whole bearish candle, we filled it entirely with yesterday's candle and we swallowed part of it. And what is interesting to see is that when we look at the short term, we also see that we went to retest the upper part of the retest that we had. We have the lower part, the upper part. We didn't have any reaction on the lower part, so that means we went for the upper part. Relatively mixed reaction. I admit to you that here, I am very disappointed by what is happening, and I think that there is a good chance that we will do something like that and that we will start to rise again to potentially seek the CME gap which was left here, or even go and retype the higher liquidity. Don't forget what I had said. We are in a range which is between 44,000 and 37,000 for me. A range which is located if we take a little step back here. So I think that here it will be seen maybe better. That's it. High range, low range with potentially extensions to fetch liquidity above 38,000 and liquidity below here, a little bit below 37,000, so potentially 35,000, 32,000. For me, this is the range in which we will stay for a while before really having the bull run and the establishment of the bullish acceleration that we expect, which is rather classic. Generally, when we arrive near the halving, we have this typology of movement, and therefore inevitably we are prepared. In all cases, the two scenarios that I have are a maintenance of this zone, therefore 42,700. If we hold the 42,700, there are great possibilities of having a bullish reacceleration. If, on the other hand, we break the 42,000 and we really break the order block here, because we have a small order block that could take place, that's ire for me, it's a small accumulation with a little bit there to start again. There we have a little setup to get a little higher, but if we break this level there and validate below, for me, we will look the bottom CME gap, okay? So here we would validate a bearish retest for the second bearish leg, okay? I told you that for me that was not strong enough, not powerful enough, that we had not retraced enough, and there we have a retracement which is rather coherent to have a bearish continuity, and which is the scenario to be the current time that I favor, despite the fact that we really have very little volume, and that clearly the reaction here is very weak, really very, very weak. And I think that here we are in the process of to see is that the general market, that is to say the stocks, are in the process of positioning themselves sufficiently strong to have a momentum which is also being created. Are we finding ourselves in a dynamic of building consolidated products? I do not think so. We are still far from the integration of BTC into effective products with shares. On the other hand, I think that we will have a form of reallocation which will take place on the Nasdaq on potentially riskier assets with the validation of a potential ETF. So we will be able to have a faster than expected influx of institutional liquidity through the means that will be put in place. In particular, the ETF, in terms of the total, Market 3 is very interesting in that we have completely swallowed the candle, and that's really the difference between the two. We can clearly see here that BTC is underperforming compared to altcoins in the bullish acceleration that we are having, which is rather positive and which actually validates a certain number of things for us, which is confirmed by our ribbon, in which if we exceed 120, 125, we are overperforming. If we are below the 95, generally we are underperforming, and this is the representation here of altcoins compared to BTC, and what is interesting to see is that we still have a majority who are in overperformance. We have a majority, well really the majority rather, which are in the BTC bias therefore, which are approximately identical, and we still have a certain number of cryptos which are overperforming, and a certain number of cryptos which are underperforming but which are much lower. So the little one at the bottom there is DXY, but which is rather classic. There was a big release of tokens, so obviously we have a bearish pressure, which is very strong, which is rather normal. And then we still have certain cryptos, like that's ING. I think I don't usually say stupid things. Yes, that's it. It's INE in which we really have an outperformance and over-speculation around this project in which, despite the inflection here that we could have compared to the BTC drop, we sees that we really have an outperformance, and that allows us to see, in fact, the general state of the market. And the more we actually have a gap between the different cryptos, which is between those at the bottom and those at the top, that means that we have over-speculation and therefore behind an overperformance of the entire altcoin market compared to BTC. So we have an absorption of liquidity which is taking place. In terms of order flow, two things that are interesting and important to note are that we had already seen that we had here a hedge cut that had taken place. The bullish breakout that we had there. It's people taking profits on their shorts. And we see here a drop, an inflection at the level of longs. It's not necessarily a profit taking, okay, on the positions, but more for me, because what do we see? We see the increase in open interest which is being validated. So for me, it is more the inflection which is underway in relation to the establishment of a new edge which is in the process of being done. That's why I'm telling you that I still have a downward bias. In any case, that's what the top traders are positioning in their position. In terms of liquidity, we sought classic liquidity in this area. We strengthened liquidity. At the top, reinforced the liquidity at the bottom, which is especially interesting for me. It will be here. On Kingfisher, we can clearly see that we have the big block of liquidity above, just above the zone where we have stopped. So which corresponds moreover, I think, to a small level of gap that we have. And then we have the lower liquidity in which we have recreated the liquidity just below here, the zone that we have pushed. All right? We forget there we have a false wick. It does not exist. But that does not prevent us from really having this interesting zone. We are creating overall an element conducive to having a bullish acceleration or a bearish acceleration. Regardless, we are in the process of compressing liquidity around the ranging zone, which is rather positive for BTC, for a return of volatility. Another thing in terms of CVD, I'm really watching the CVD perp because we're starting to have a scenario that looks like that. Still a little far away, but we're getting closer. So I'm really watching to potentially get this acceleration. Once again, this overexposure that we could have at the level of BTC to seek liquidity above key levels. I hope you liked this video. If so, don't forget to leave me a like and a comment. It supports the channel, and above all, it makes me very happy. And we meet at 13:30 to talk about Meetus.